The crypto market just shook the world. Charts bled red, panic spread like wildfire, and traders rushed to call it a crash. Bitcoin dropped, altcoins tumbled, some losing 15, even 20% in a single day. Fear was everywhere. But here's the truth most people miss. This isn't the end. It's not a collapse. This is the reset. An essential moment in every cycle where weak hands get flushed out, leverage gets destroyed, and the foundation for the next massive rally is quietly built. While fear was dominating the headlines, something powerful was happening behind the scenes. Ethereum quietly began outperforming Bitcoin. Altcoins like HBAR SUI and XLM started bouncing from their lows. And if you look closer, you'll see the early signs of Phase 2. The stage where Ethereum takes the lead, institutions pour in, and altcoins begin their march toward parabolic growth. So listen carefully. If you hold XRP, XLM, HBAR, or SUI, or if you've been waiting for the right moment to position yourself, this could be your signal. Don't just watch from the sidelines while smart money moves. Stay with me because in the next few minutes, I'm going to break down exactly what just happened, why it matters, and how it sets the stage for the biggest crypto opportunity of the year. But before we dive deep, do one thing for me. Hit that subscribe button, turn on notifications, and join a community that's preparing, not panicking. Because this channel isn't just about watching the charts. We focus on strategy, timing, and education that helps you win in crypto when everyone else is confused. And if you're serious about staying ahead, drop a comment right now with the coin you're most bullish on, because I'll be watching the comment section for ideas to cover in future videos. Now, let's break down the pullback, the reset, and why this may be the moment crypto holders have been waiting for. When the market suddenly turned red, it felt like the floor was collapsing beneath investors' feet. Altcoins dropped 10% to 20% in hours, portfolios shrank, and fear spread faster than rational thought. Everywhere you looked, Twitter, news outlets, even casual conversations, one word echoed again and again: crash. But here's the reality. What we just witnessed wasn't destruction. It wasn't the end of the bull cycle. It was a reset. A healthy, necessary cleansing moment that every strong market goes through before making its next big move. To really understand this, let's step back. In the days leading up to this pullback, the crypto market was running dangerously hot. Sentiment was euphoric, too euphoric. Everyone was convinced prices would only go up. Funding rates on leveraged trades spiked to unsustainable levels, meaning traders were literally paying outrageous premiums just to stay long. People weren't just buying coins, they were betting the house, expecting a straight line to the moon. And when the market becomes that one-sided, what happens? The larger players, the whales, institutions, and market makers, do what they've always done. They press the reset button. That's exactly what this move was. In a single sweep, nearly $1 billion in leveraged long positions were liquidated. Ethereum and XRP were hit hardest, not because they're weak assets, but because they were the most crowded trades. By forcing liquidations, the market cleared out the excess leverage, leaving behind a healthier playing field. To the average trader, that looks like chaos. But to the trained eye, it's actually a sign of strength. Why? Because without these flushes, the market becomes brittle. Imagine a tower built on weak foundations. Sure, it might rise fast, but the higher it climbs, the easier it crumbles. Liquidations wipe away the fragile, over-leveraged bets and leave behind solid ground built on real demand, real conviction, and stronger hands. Think of it like this: markets are like ecosystems. And just like in nature, fire can play a critical role in renewal. On the surface, a controlled burn looks destructive. Trees fall, smoke rises, the land is scarred. But underneath, something powerful is happening. The soil is enriched, pests are cleared, and new, stronger growth is prepared to thrive. That's what this pullback accomplished. It cooled down the overheated market, purged the greed, restored balance, and gave altcoins the breathing room they need to rally again. Without a moment like this, the rally that follows would be unsustainable, vulnerable to collapsing under its own weight. History confirms this pattern. Every major bull cycle has been built not on straight lines upward, but on pullbacks, sharp, painful resets that prepared the market for the next explosive wave. In 2017, Bitcoin saw multiple drops of 30 to 40% on the way to new all-time highs. In 2020, the same story played out again. Each so-called crash was nothing more than a reset before a parabolic breakout. So, instead of staring at red candles as if they signal the end, recognize them for what they truly are: the foundation for the next bull wave. This is not the market ending, it's the market preparing. And the signals we're seeing now point to something much larger than a quick bounce. This reset isn't just cleansing. It's setting the stage for a phase shift, a transition where Ethereum, altcoins, and institutional demand all converge to ignite the next leg of the bull run. Ethereum's strength and why it matters. When markets bleed, it's easy to panic. Charts turn red, retail runs for the exit, and narratives of crypto is dead begin to circle like vultures. But every cycle, if you look closely, there's always one asset that refuses to sync with the rest. This time, that asset is Ethereum, ETH. This isn't random. It's not luck. It's a signal. Ethereum has quietly been absorbing liquidity, showing resilience even while Bitcoin faltered. For those who understand how cycles work, this is exactly the type of behavior you pay attention to. Because history tells us one thing: every market cycle has a leader. In 2013, Bitcoin was the face of the market. In 2017, Ethereum introduced ICOs and captured massive liquidity. In 2020 to 2021, Ethereum again dominated with DeFi, NFTs, and Layer 2 scaling. Now, in this new phase, Ethereum is positioning itself as the anchor asset of smart money. Why Ethereum's strength is not an accident. ETH staking creates a structural supply shock. Ethereum's shift to proof-of-stake fundamentally changed the game. Millions of ETH are now locked in staking contracts, out of circulation. Unlike Bitcoin, which continuously releases new coins into the market, Ethereum is actively reducing sell pressure. When ETH is staked, it's essentially removed from the liquid supply. This creates a supply crunch, where fewer coins are available for trading while demand keeps rising. In traditional markets, this is called a liquidity squeeze, and it often leads to sharp price appreciation. In other words, Ethereum is slowly becoming a deflationary asset. The rise of Layer 2 networks. Ethereum is no longer just a blockchain. It's an ecosystem. Arbitrum, Optimism, Base, ZK Sync. These are not side projects. They're scaling solutions onboarding millions of users at a speed Bitcoin never achieved. Billions of dollars in total value locked TVL now sit on these Layer 2s, all of which ultimately settle back to Ethereum. Every transaction, every dApp, every bridge on these networks strengthens Ethereum's network effect. In simple terms, Ethereum is becoming the operating system of the decentralized world. Institutional and corporate adoption. For years, Bitcoin was seen as digital gold, a store of value. But when banks, hedge funds, and corporations want to build real products, issue tokenized assets, or experiment with blockchain-based infrastructure, they go to Ethereum. JP Morgan has built on Ethereum. BlackRock's tokenized funds are tapping into Ethereum rails. Tech giants like Microsoft and Google Cloud have Ethereum integrations. These are not speculators. They're long-term builders. When institutional adoption arrives, it doesn't chase hype, it chooses infrastructure. And Ethereum is that infrastructure. Why this signal matters for altcoins. Here's the part most retail investors miss. When Ethereum shows strength, it isn't just ETH holders who win. It's the entire altcoin market. Why? Because historically, Ethereum leads, confidence returns, liquidity rotate, altcoins rally. ETH dominance is the ignition switch for market rotations. When ETH outperforms Bitcoin, it often precedes massive altcoin seasons. So, when you see Ethereum standing tall while the rest of the market is bleeding, understand this. It's not just a random green candle. It's a domino waiting to fall. Once Ethereum proves its dominance, the liquidity it attracts doesn't stay locked. It spills over into other assets. XRP, XLM, HBAR, SUI, and dozens of altcoins. This is how crypto rotations happen. The bigger picture. Phase 2 has already started. Most people think we're waiting for the bull run. The truth? It has already begun. It just doesn't look the way retail expects. The early phase of every cycle is marked not by memecoins flying or overnight 100x tokens, but by strong hands quietly positioning into assets that show resilience. Ethereum is showing us the signs right now. Locked supply, growing ecosystem, institutional adoption, market resilience. Phase 2 isn't coming. It's here. The only question is, will you recognize the signals before the crowd does? Or will you wait until the headlines scream Ethereum all-time high to start paying attention? Bottom line, Ethereum is not just surviving, it's leading. And if history is any guide, where Ethereum goes, the rest of the market eventually follows. One of the most misunderstood, but also most profitable concepts in crypto is market rotation. Most beginners think the market moves randomly, but seasoned investors know there's a clear rhythm to how capital flows. Understanding this cycle is the difference between chasing pumps and positioning yourself before they happen. Let's break it down. Step 1. Bitcoin sets the stage. Every cycle starts with Bitcoin dominance. When new money enters crypto, whether from retail investors or institutions, it almost always flows into Bitcoin first. Why? Because Bitcoin is seen as the safest crypto, the digital gold. Institutions trust it more than altcoins. Beginners feel safer buying it as their first exposure. This is why, in the early stage of any bull cycle, you'll see Bitcoin outperform almost everything else. Example. In 2020 to 2021, Bitcoin surged from $10,000 to $64,000 before many altcoins even began their real runs. Step 2. Ethereum takes the torch. Once Bitcoin stabilizes and investors feel the FOMO itch, fear of missing out, they look for the next opportunity. That's when liquidity starts flowing into Ethereum. ETH benefits from this transition for 3 main reasons. It's the second most trusted asset after Bitcoin. It has real utility, DeFi, NFTs, smart contracts, and stablecoins. ETH staking and Layer 2s reduce its circulating supply, creating scarcity. Historically, Ethereum's breakout has marked the beginning of what's called altcoin season. Step 3. The altcoin floodgate opens. After Ethereum makes its move and proves strong, traders start rotating profits into large-cap altcoins like XRP, ADA, and Matic. Soon after, money trickles down into mid-caps and small-caps, fueling explosive rallies. This process creates the domino effect. BTC, ETH, large caps, mid caps, low caps, meme coins. Example. In early 2021, ETH broke out to $4,000. Immediately after, coins like Solana, Cardano, and Polkadot saw parabolic gains, followed by smaller projects pumping 10x, 20x, even 50x. Step 4. The peak and reverse rotation. Here's the crucial part. Rotations don't last forever. At the peak of altcoin season, Bitcoin dominance collapses, and almost every coin is running hot. This is usually when retail, the latecomers, pour in at the top. Then smart money starts rotating back into Bitcoin, or even into stablecoins, locking in profits. This is why so many traders get wrecked. They chase late-stage pumps without understanding the flow of capital. Lesson. If you can spot rotations early, you ride the wave. If you enter too late, you get caught in the dump. Why this rotation matters now. Ethereum's current strength is a signal that we are entering the transition from Step 2 to Step 3. Bitcoin has already had its run. Ethereum is holding dominance. The next logical stage? Capital rotation into altcoins. This is where fortunes are made, not by chasing Bitcoin after it's doubled, but by anticipating where the money flows next. The bottom line. In simple terms, Bitcoin lights the match. Ethereum fans the flame. Altcoins explode into a wildfire. If you can understand this rotation effect, you stop guessing and start positioning yourself where the money is headed, not where it already is. This entire breakdown has been about crypto holders. Please listen now. XRP, XLM, HBAR, SUI, and more. And the message is clear. The recent pullback wasn't the end of the story. It was the beginning of a reset that could open the door for the next major phase of this market. Ethereum is leading, Bitcoin is steady, and the altcoins we've highlighted, XRP, XLM, HBAR, SUI, and more, are showing signs that the awakening has already started. The opportunity in front of us doesn't come around often. Pullbacks shake out the weak hands, but they also set the stage for those who understand the cycle. If you're here right now, you're ahead of most. The only question is, will you stay prepared, stay informed, and position yourself to ride this awakening? Or will you let it pass you by? Make sure you're subscribed, turn on notifications, and stay connected. Because in this market, timing is everything, and the next moves for XRP XLM HBAR SUI, and the rest could define the entire bull run.